According to today's Financial Times, we may soon witness stock trading where the market never closes. The New York Stock Exchange, NYSE, is wading into the waters of 24/7 stock trading with a survey sent to market participants. This move comes on the heels of a recent application by a startup exchange seeking to operate around the clock. The rise of cryptocurrencies, which trade continuously, and a significant increase in retail investor activity, particularly during the COVID-19 lockdowns, are fueling interest in extending trading hours beyond the traditional market schedule. Currently, some retail brokers offer limited after-hours trading options. However, these platforms often rely on mechanisms like limit orders, where investors specify a price for buying or selling, and if the order isn't met within a time frame, it expires unfilled. A formal 24/7 exchange would be a significant shift, bringing stricter regulations and increased transparency to nighttime trading activity. The NYSE survey delves into several key issues surrounding potential round-the-clock trading. It probes participants' opinions on staffing overnight sessions, ensuring adequate investor protection during potentially volatile periods, and even explores the possibility of weekend trading. Proponents of the extended hours model argue that it would better align the stock market with other always-open markets, like foreign exchange, and cater to the growing demand from investors who want more flexibility in their trading schedules. However, the proposal faces challenges. Concerns remain about the potential for low trading volume during off-peak nighttime hours, which could lead to wider bid-ask spreads and increased volatility. Additionally, ensuring the smooth settlement of trades conducted outside of regular business hours raises questions about potential settlement risks. Staffing costs associated with overnight operations also present a hurdle. Notably, institutional investors seem less enthusiastic about the prospect of 24/7 trading, citing anxieties about potential liquidity issues in an environment with fewer active participants. The NYSE survey reflects a growing debate within the financial industry about the future of stock market hours. As the landscape evolves and technology advances, the traditional model of a set trading schedule may be nearing its end. However, significant questions and potential hurdles need to be addressed before the concept of a 24/7 stock market becomes a reality.
The 19-day crisis witnessed a frenzied effort by U.S. officials to mitigate escalating tensions between Israel and Iran. It commenced abruptly on April 1, when Israel unilaterally launched a strike in Damascus, targeting Iranian officers and triggering immediate retaliation fears. The strike killed several senior Iranian military leaders, including General Mohammad Reza Zahedi, sparking outrage in Tehran and setting the stage for a retaliatory response. Despite receiving a last-minute heads-up from Israel about the attack, U.S. officials remained uninformed about the targets and locations involved. As tensions escalated, both U.S. and Israeli officials anticipated a potential Iranian retaliation, fearing direct attacks on Israel, a scenario never witnessed before. The U.S. bolstered its military presence in the region, deploying additional assets to bolster Israel's defense capabilities and preparing for potential Iranian proxy attacks against U.S. positions in Iraq and Syria. Amidst heightened uncertainty, Iran's warning of a forceful response further fueled concerns of a broader regional conflict. Throughout the crisis, communication between the U.S. and Israel was strained, with U.S. officials expressing frustration over the lack of consultation and transparency regarding Israeli military operations. Despite tensions, the U.S. reaffirmed its support for Israel and engaged in diplomatic efforts to de-escalate the situation, urging restraint and caution. The crisis reached its peak on April 13, when Iran launched a massive barrage of missiles and drones towards Israel. In a tense atmosphere, U.S. and Israeli defense systems worked in tandem to intercept the incoming threats, successfully defending against the largest attack Israel had faced in decades. Despite the initial shock, the coordinated defense strategy prevented significant damage, marking a crucial turning point in the crisis. Following the crisis, the U.S. shifted its focus to restraining Israel's response, emphasizing the importance of avoiding further escalation. Despite internal pressures for retaliation, Israel opted for a measured response, targeting a single military site in Iran's Isfahan province. This calculated move, coupled with improved strategic positioning, signaled a tenuous de-escalation, averting a broader conflict in the Middle East and highlighting the importance of diplomacy and strategic restraint in managing regional crises.
Professional services firms, notably McKinsey, are intensifying efforts to streamline their workforce through aggressive performance reviews and incentives for low performers to leave. McKinsey's recent partner meeting in Copenhagen highlighted a cautiously optimistic outlook for the consulting market, although it hasn't shielded the firm from the need to reduce staff numbers. Mid-year performance reviews have taken on greater significance, with underperforming consultants facing potential dismissal. This push for attrition comes amid a broader trend of historically low voluntary departures across the professional services sector, spurred by a shift in hiring dynamics and economic conditions. McKinsey's measures to increase attrition include offering financial incentives for mid-level staff to exit and implementing layoffs, particularly in specialized areas such as data and software engineering. Global managing partner Bob Sternfels signaled a commitment to rebalancing the firm's workforce, aiming to restore attrition rates to previous levels. The decline in attrition rates has impacted firms' profitability, prompting a strategic reassessment of staffing levels and performance management. The phenomenon of reduced attrition extends beyond McKinsey, affecting other consulting and accounting firms worldwide. Deloitte and KPMG have noted historically low turnover rates, while Bain and BCG have adapted their attrition strategies to address changing market conditions. The shift from voluntary to involuntary attrition poses challenges to the traditional up or out model prevalent in professional services, leading to fewer promotions and increased competition among staff for advancement opportunities. Despite the challenges posed by reduced attrition, the consulting sector is showing signs of recovery, with firms cautiously optimistic about revenue growth in the coming years. However, it may take until 2025 for hiring, firing, and promotion practices to stabilize as firms navigate the post-pandemic landscape and adjust to evolving market dynamics.
Pro-Palestinian activists in the United States are ramping up efforts to draw attention to the humanitarian crisis in Gaza amid escalating tensions between Israel and Iran. Recent events, including protests, arrests, and demonstrations, underscore a heightened sense of urgency among these activists to pressure both lawmakers and the public for action. As the Democratic National Convention approaches, organizers are planning large-scale protests to demand a permanent ceasefire and the suspension of U.S. aid to Israel. The swift pivot from Iran back to Gaza by pro-Palestinian groups has reignited debates surrounding U.S. support for Israel and galvanized renewed calls for action. Despite facing criticism, activists remain steadfast in their commitment to their cause, seeking to influence both public opinion and government policy. The push for change is expected to intensify as the election nears, with organizers planning mass protests in Chicago during the Democratic National Convention in August. Pro-Palestinian groups are employing various tactics to raise awareness and mobilize support, including organizing demonstrations, releasing letters, and leveraging social media to amplify their message. They aim to hold lawmakers and institutions accountable for their stance on the Israeli-Palestinian conflict, advocating for a more balanced approach that prioritizes human rights and international law. While activists continue to face challenges and opposition, they are undeterred in their pursuit of justice for Palestinians. Despite criticism from Republicans and some segments of the public, they remain resolute in their efforts to effect change and address the ongoing humanitarian crisis in Gaza. President Biden's response to the conflict has come under scrutiny, with both supporters and critics weighing in on his administration's handling of the situation. Biden has reiterated the United States' support for Israel while urging caution to prevent further escalation in the region. However, the growing dissatisfaction with his approach highlights the complexities and divisions surrounding U.S. policy toward the Israeli-Palestinian conflict.
South Korea's economic landscape is facing scrutiny as the country grapples with shifting dynamics and challenges. While massive investments in chip-making facilities underscore efforts to maintain technological leadership, concerns linger about the sustainability of the country's traditional growth model. Despite past successes, signs of economic slowdown and structural weaknesses are emerging, prompting calls for reform. The dominance of manufacturing and conglomerates, while once instrumental to South Korea's economic rise, now raises questions about adaptability and innovation. Demographic shifts, coupled with a lack of progress in addressing underlying issues like low fertility and regional inequalities, further complicate the economic outlook. The push to maintain competitiveness in chipmaking reflects South Korea's ongoing reliance on established industries, but some argue for diversification and investment in new sectors, like AI. Challenges in navigating geopolitical tensions and global competition underscore the need for strategic planning and adaptation. While optimism about South Korea's economic resilience persists, concerns about reform stagnation and reliance on outdated models linger. The path forward requires bold policies to stimulate growth, foster innovation, and address structural imbalances, all while navigating an increasingly complex global landscape.
Tesla shareholders are bracing for the company's worst quarterly performance in 7 years amid slowing demand and a potential shift in direction towards self-driving technology. Reports suggest a slowdown in plans for a cheaper $25,000 electric car, with emphasis shifting towards autonomous robotaxis. CEO Elon Musk denies any change in plans but highlights the importance of autonomy. Shareholders face uncertainty over whether Tesla will prioritize large-scale manufacturing or focus on autonomous technology. The public launch of a Tesla robotaxi in August is seen as crucial for the company's self-driving ambitions. While some investors anticipate increased production and delivery, others worry about losing market share amid rising competition. Analysts predict underwhelming quarterly results with the lowest gross margin since 2017 and potentially negative free cash flow. Despite challenges, some analysts foresee a shift in Tesla's investor base towards longer-term AI/tech investors, signaling potential changes in the company's trajectory.
Please consider subscribing if you found this video to be helpful. Thank you.